In today's video, I am going to be breaking down ZNQ, which is a BMO NASDAQ-100 Equity Index ETF. So basically, let's get down, let's check this out. Let's see what it is, let's see how it is, let's basically see if it fits your portfolio or mine or whatever. Let's check it out. Okay, so the benefits basically of this ETF is it's designed for investors looking for growth solutions. It provides convenient and efficient exposure to the U.S. non-financial equities and also benefits from local currency appreciation, and it's also professionally managed by the BMO Global Asset Management team. Now, they have been getting a lot of great reviews lately. Some of their ETFs are a bit newer like this one, so let's check it out. Let's see how it really does. So its ticker symbol is ZNQ, and basically it's going to be also in the Canadian currency. It's on the TSX. Its annual distribution is somewhere around the 0.36, 0.4 area, depending on the day it is on the market, essentially, and it's quite low when it comes to other BMO ETFs. Now, the higher management fees, the more you basically hope to really make on the ETF. So at 0.35%, it's a heck of a lot better than most mutual funds. I'm a big fan of ETFs over mutual funds at this point in time myself. Also, being an ETF, you can basically day trade it if you wanted to. It's obviously not going to appreciate as much as an actual stock usually, but basically, I like ETFs better than mutual funds. Mutual funds usually takes a day or more to sell, depending on your brokerage and whatever, while ETFs can be right away. It depends on how much you want to sell it for, really. Now, the downfall to this ETF is going to be the market volume. It's 11,500 roughly shares trading the table every single day. So at that point, it may be a bit hard to get out of the ETF if you're looking to sell on a day where the market is going down. So keep that in mind if you're looking to not necessarily hold this for the long term. The next thing I like to look at is, what does the ETF hold? What are some of the companies it holds? And here we can see it is a index ETF, so it's going to be holding most of the stocks on the NASDAQ. It's 100 of the top stocks on the NASDAQ. And we can see here, the top one is Apple. There's no surprise there. Next is Microsoft, Amazon, and Tesla. Now, I am going to assume that the Tesla stock is most likely going to be going up when it comes to the percentage of the portfolio in the coming months, if not the coming year, because Tesla stock is going to continue to go up in my mind. I think they're going to have a killer quarter. Of course, this video is going to be released after the quarter has been announced, so by the time this video is released, this number may even be bigger. It's also holding both Alphabet shares as well as Facebook, Nvidia, PayPal, and Netflix. Now, if you really want to look into the future, I think Apple is going to have a massive part into the future, same as Microsoft, and Amazon is most likely as well going to be massive in the future. We are now, because of the virus, going more and more online, and these three companies right here are going to be a massive part of the future. Going to Facebook, that is going to be a bit risky in my opinion. There's going to be a lot of new regulations coming out because, of course, they are not in favor of the Republicans, and we can see that that's just not going to be working out for them for at least the minimum term. But again, Biden is in office, so they just may get away with a lot more, and their stock may continue to go up. Tesla is also a massive holding, and also, in my own personal pocket, Tesla is a massive holding, mainly because they are basically the future of cars, in my opinion, but not just cars. They're not just a car play, and I've broken down Tesla very recently in a video. They also do solar panels, batteries. They're going to be doing electrical grid work. They are going to be a massive future technology, especially with the Biden administration really wanting to go over to renewable energy. They are going to be a major player. Nvidia, everything's going to cryptocurrency probably in the future, and of course Nvidia graphics cards are massive when it comes to mining of that stuff, and I'm going to be having a video coming out very soon talking about how to invest in Bitcoin on the stock market because you actually can. And of course, PayPal Holdings is another future technology that is huge. It's another Elon Musk company, but he of course got bought out. And PayPal, that's what I use with my own business, and it's just fantastic. You can make payments with anybody around the world and get paid without having to worry about other countries' governments trying to tax you on everything. If you live in Canada, you can make money in American and still be happy. Netflix had a blowout quarter, and they probably will continue that as well. Now, they do pay a dividend, generally roughly around the 0.5-ish% right now with where the ETF is currently holding at. However, I would also be looking at what happened last year with 2020 and their dividend. And we can see there's nothing that was reinvested with BMO ETFs. Sometimes there is a reinvested distribution, but this one did not have it. The cash distribution per unit was 25 cents. And that happened in January 5th. However, you would have had to hold the stock on December 30th. So we can see that this ETF was around since February of 2019. So we get to see what happened to it during that March. I'm going to call it a negative bubble because that's essentially what it was. It was a V recovery, which is fantastic, but it basically went back down to almost where it started. Essentially the beginning of the year, and then it just was a rocket ship up. That is because we now need technology to basically do everything, and that is huge. Will this pop back down? Possibly, and you might be able to do that and grab it maybe a couple of cents cheaper over the next week or so. It's hard to really say, but it's hard to bet against these companies right here. Is extremely hard to bet against them right now. The way the future looks with the coronavirus or whatever you want to call it, pandemic, and everything in the future, it's really hard to bet against them right now. So even though this is not a massively big dividend ETF, it can still give you massive, massive growth. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.